Hi everyone. Today we are going to give you some insights on India VIX. What is India VIX? India VIX is an index indicating the Indian market's volatility from the investor's perception. Volatility and the value of India VIX move parallel, which means a higher value of India VIX indicates higher volatility expectations, and that is a significant change in Nifty, and a lower value of India VIX indicates lower volatility expectations, that is a minimal change. So how does one interpret India VIX? VIX has a strong negative correlation with Nifty. A simple rule, and one can say a golden rule to remember about the relationship, is when VIX is high, it's time to buy, and when VIX is low, it's time to go. One can also say India VIX is an indicator of market sentiments. When VIX is high, volatility is extremely high in the markets, and quite often one observes prices crashing ferociously. This leads to fear in the minds of investors and traders who scramble to exit their position to prevent themselves from further loss. However, this is exactly the time when prices hit the bottom and start to move up. On the other hand, if VIX is low, volatility is low, and investors are generally more complacent as they see index moving higher and higher every day. This is where greed sets in, and one sees prices going up every passing day. Unfortunately, this is also exactly the point where investors get trapped by buying near the tops. As they say, extreme fear marks the bottom and extreme greed marks the top. An educated investor or a trader can use India VIX in exactly the contrarian way and avoid mistakes of a typical investor. How? Now that we know higher VIX marks the bottom and lower VIX marks the top, the investor or a trader needs to get a little cautious and be on his toes when India VIX is around the lower range, as this is where rising markets can turn around and start falling. A trader should look for bearish candlestick reversal signals before exiting the position or before creating fresh short positions. Similarly, when India VIX is high, a trader or an investor should understand this is an opportune time to enter the market, as this is where falling price can reverse and start to go up. A trader or an investor should look for bullish candlestick reversal signal before entering the markets. The $1,000,000 question is, what is high and what is low? So historically, the levels above 35 are considered high for India VIX, and levels below 15 are considered low for India VIX. Taking example from these charts, you can clearly see when markets made a top of 12,216 in Feb 2020, India VIX gave an ample warning beforehand as it was trading around 12 to 15 levels. It was a signal to be cautious and exit from the markets. And just when the markets hit the bottom of 7511 on March 2020, you can see India VIX was trading around a whopping 75 levels, a level never seen before. However, this was a signal to be greedy and enter the markets on observing any bullish candlestick reversal signal. So what's our current view based on India VIX? If we apply the same logic and look at the current India VIX, you can observe that India VIX currently is trading at historically low levels around 12 to 15. And on the other hand, we can see Nifty is extremely overbought on weekly time frames, monthly time frames, with its RSI above 72. This tells us that from a reward to risk perspective, this is clearly not the time to take a fresh entry in the markets, and a correction is likely. A small caveat: India VIX, with all its advantages, utilities, needs to be used in confluence with the price charts, as there are times you can see over here when India VIX remains in the range for a very long time. Thus, for optimum results, always combine India VIX with price charts and technical analysis. Thank you very much, and I look forward to see you soon. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.